This is the weekly review for the week of January 16th to January 20th, as well as this week's Sunday preparation. So, coming into the week, I didn't really have a clear bias. I was leaning bullish because we violated these um, bearish daily PD arrays here. Um, so, I really just wanted to wait for Monday's trading to see what would happen. But I was kind of coming in with a bullish bias. So Monday was a bank holiday. It was Martin Luther King Day, and I was expecting consolidation, and that's pretty much what happened. I didn't take any trades. The only one that I noted was this setup right here, where we traded down into an hourly. Oh, I don't have them. We traded down into an hourly fair value gap as well as an hourly order block here, and we had a low time frame US 30 SMT. And in the YouTube model, ICT said that we could also take liquidity by dipping into a fair value gap in addition to taking liquidity above like a swing high or a swing low. So that's what I noted here, and how we had this intermediate term break in market structure and this low resistance liquidity run here in this M15 range. So from that high to that low. And once we broke this market structure here on the M5, I said that regardless of the bias, it would be, or it's highly likely that we at least retrace into premium of this dealing range here, because this low and lower low is a high resistance liquidity run with SMT breaking market structure, and it's likely to at least trade up into a portion of this M15 fair value gap. So, and regardless of the bias, right, it would either trade up into premium and fall down, or trade up into premium and continue higher. I didn't know that at the time, but I knew that it was highly likely it would at least trade up into premium. So that's why I noted this trade here. Now, there was no fair value gap, but I just wanted to note the logic that we came down into discount of this dealing range here into this order block. And then we had a little dip into this fair value gap here, institutional order flow entry drill, and we did end up trading up into the premium and going higher. But the logic for this trade is mainly what I wanted to note in the journal, and it played out really nicely. That was pretty much it for Monday, because we had a short session. It closed at 1 p.m. So at the end of Monday's trading, I was thinking that if we were going to be bullish, we would have Tuesday would create some type of SMT with Monday's low, and that's what ended up happening here. And we had quite a few nice setups on Monday. On Tuesday, excuse me. Unfortunately, I wasn't really on the charts because I was only on my phone since I was at work, and I was kind of falling asleep throughout the whole day. So I missed all of these setups. Um, this one here was nice, where we had a failure swing with previous day's low, broke market structure, and then came down into this fair value gap and balanced price range prior to the 9:30 open, and we traded up into previous day's high and took this Sunday high buy side liquidity. Um, and overall, we were still in what looked like a consolidation here. So we ended up having another SMT with previous day's high, forming another setup here into premium, and it hit that 1.3R here, and also a compound entry taking lunch high, breaking market structure, coming back up into premium. But yeah, I missed all of these setups, but I noted them in my journal because they were pretty clean. So moving on to Wednesday. Wednesday again, I was on my phone the whole day, so I didn't take advantage of anything, and there really wasn't anything on the M5 to take advantage of. Um, once we had this SMT with previous day's high and this M5 break in market structure, I was just waiting on my phone to see if we would get a retracement back up into premium, but because we had these equal lows down here and then these equal lows down here, um, and after I saw this big displacement down with that SMT up here, I was looking for sell side to get taken out, but we ended up just running lower without giving any retracements on the M5. Now I did note that there was a setup on the lower time frames on the 2-minute chart, and ICT did a review of this trading day, the 18th, on his YouTube channel. But I just noted that we had this lower time frame entry here coming up into this 2-minute balance price range and fair value gap, but I didn't take this. And anyways, ICT said he was waiting for this low to be taken out because he was anticipating a raid of the Tuesday high, but the break in market structure here is what he said confirmed that we weren't going to get a raid of previous day's high. And then he got an entry on like the M1 somewhere in here. So nothing really on Wednesday for me on the M5. I did note this entry. I was watching this on my phone to see if we were going to get a power 3 setup here. We never broke market structure this high, right? We never closed above it. So I was just watching this balance price range in this order block, and we almost would have hit take profit, but then we ended up rolling over and continuing lower for the session, the PM session, and not giving any power 3 type of setup. But yeah, there was no break in market structure here with a closure, so that's why I didn't set limits for this trade. Now, Thursday is where things started looking really nice for me, because we had on the hourly time frame this large expansion down. So I was anticipating some type of retracement because ICT says that after expansion comes a retracement or a reversal. So regardless of which one it was, I was anticipating price to trade up, which is why I was looking for bullish price action on Thursday. And that's what we got here with this break in market structure. We had a low time frame raid here, displacement up. We broke this intermediate term high and came back down into discount here from that dealing range high to that dealing range low, inside the fair value gap, inside the breaker, and inside this order block here. So I got that, and I took the 1.3R take profit here, and I was looking at this as a potential market maker buy model, with this being the original consolidation. So I got in on a compound entry here after we broke this M5 intermediate term high, and I got in on this setup here inside this fair value gap right here. It's looking a little busy, so I'll take out the first trade that I took. This M5 fair value gap and balance price range, and price ended up stopping me out by a little bit and then going up to TP, and that's because we were in this M5 order block. So if I had put my stop below that, I may have been able to get the 1.3. Probably would have been just shy of 1.3 because there would have been spread. So I got a loss here I forgot to put on the executions. Um, and this ended up being a RTO to a bearish 2-minute fair value gap, because we ended up coming up into this M15 order block, taking sell side, having displacement down. Now, I wasn't anticipating this to occur, price to break this M5 order block, because I was, again, looking at this as a market maker buy model. So I thought this M5 order block would support price and send price higher to take out these relative equal highs up here. But that didn't end up happening. So I was anticipating this bearish 2-minute fair value gap to not play out. And we ended up trading lower, and we had a SMT with, move these out of the way, the AM session low, and we broke market structure here, and I saw we left these relative equal highs. So I was looking for a long. This is obviously the YouTube model. The only thing was I was waiting for lunch session to end, and lunch session ended right here at the closure of this candle, and we already started getting that expansion up. So I didn't want to market in here because ICT says not to take a trade in the lunch session. So I was literally just waiting for 1 p.m. so I could market in, but it was already too late, and we took out the equal highs here. But otherwise, I would have got into this trade. Then we ended up setting up another trade after breaking market structure here. I got interested. I was looking at these equal highs and this balanced price range with this SMT. So I thought we were going to continue higher for the PM session. And this trade here played out perfectly. The only thing was I accidentally set a limit right here at this low for this fair value gap. Right here. Should just mark it out. This one, because I was in a meeting at the time and I didn't see that there was a fair value gap right here lining up with the mean threshold. So I just placed the limit here and I got swerved. So I should have been in this trade and gotten a 1.3R here. But this was a clean setup here. And then we got yet another one after breaking market structure again, came back down into discount in this fair value gap and ended up trading higher. This one, though, for me, it wouldn't be as high probability because we already took the AM high that we set here. This one and this one were the two really clear trades for me. But it's nice to see that this one ended up playing out. And then I noted a potential power 3 setup here, but it was on the 2-minute time frame. Or not necessarily power 3 because we didn't make the high of the day. The high of the day was still up here. But I saw this low time frame SMT and then this break in market structure. So I was just noting this, but I wouldn't personally take this setup because we didn't make the high of the day here. So then that was Thursday. Very clean price action on Thursday, with the exception of this loss that I had here. But I should have been able to recoup those losses in these two setups because they were very, very clean. And then coming into Friday, basically what I saw on Friday was that we had this SMT with previous week's low, and we still hadn't filled this low resistance liquidity run, right? So we had that low and a lower low on Thursday, but at the same time, we had a bullish failure swing with previous week's low with US 30. So I said that it was much more highly likely to trade up into this low resistance liquidity run than it was to end up rolling over. So I was looking for bullish price action on Friday, and that's what we ended up getting here. So we had a previous day's low SMT, as well as a London low. Was this London? No. Oh, this was interim session low, SMT. Now we did have a bearish setup form that I noted here, with SMT break in market structure down and this fair value gap here. But the reason why I didn't take this setup is because, number one, I had that bullish bias that price wanted to trade up into this daily fair value gap. I should just note that this H1 fair value gap is the same as the daily fair value gap here that formed on Wednesday or after Thursday's closure. So I had the bullish bias coming in, which made me hesitant to take this, but also we were in relative, or had been in relative consolidation for the past day, and also all of London session on Friday. And typically, from what I've seen in price, if or previous price action, if price doesn't take the consolidation higher low, this is just a low inside the consolidation. And I've seen this being low probability, right? If we broke this low here as a break in market structure, I would have been more interested. But this break in market structure was just a low inside this consolidation, which is why this setup for me was low probability. And that ended up turning out to be correct, because we then had a bullish SMT, displacement up, breaking market structure. And I got in. Do I still have the executions? Oh no, I didn't get in on this one. I got in on this one. Totally forgot that. But we ended up having a break in market structure with a breaker and fair value gap here, traded back down into discount from that dealing range high, this dealing range high to this dealing range low. Got the 1.3R here, ended up trading higher, and then the setup that I did get in at was this one right here, where we had lunch consolidation, and just below those consolidation lows was an untested fair value gap, untested M15 order block. And I said that this setup was definitely bait, because I was anticipating price to trade up into at least the mean threshold of the dealing range from Wednesday's displacement high to the low created on Thursday. So I was anticipating price to at least trade up into the mean threshold of that dealing range. And that's what ended up happening here. So this setup was super, super clean. I don't remember why I didn't set limits for this. I don't have any notation in my journal about that. Let's see. Oh, no, I did note that. I missed it because I was in a meeting. So yeah, but if I had not missed it, then I would have certainly taken this setup here. And let's see. Oh, the reason I have these above or higher than a 1.3R is just because in my journal I was noting what my personal draw on liquidity was, right? So the 1.3R was right there, but on this setup, the draw on liquidity would have been previous day's high, right? If we're bullish, we should be targeting previous day's high, and also I was targeting this daily fair value gap. So could have taken a partial at previous day's high and taken another partial at this daily fair value gap here, And the same logic here, buying here, taking a partial at these relative equal highs buy side, and then taking the rest of your position off at the mean threshold here of the dealing range. So overall, this was a very clean end for the week on Thursday and Friday. Also, Monday had that very clean trade, and Tuesday. So really, that was a really good week in terms of setups. The only day that I didn't, or at least on the M5 basis, you couldn't really catch anything was Wednesday's trading. So yeah, but overall, yeah, it was a very good week. So what I'm thinking for next week, and also in terms of the news, if I could get, there we go. We have another clean week this week without any crazy high impact news. So Monday through Friday is going to be tradable with high and medium impact news occurring throughout the week. Now, I think the bias, at least in the short term, is we're in a market maker buy model right now. At least that's what I see. Targeting these relative equal highs, also previous week's high up here. I know on the daily chart, at least in terms of emotions on the daily chart, I'll be honest, I'm still kind of in like disbelief that we're continuing higher, because I was pretty sure that this break in market structure here was going to be the quarterly shift and we're going to end up going lower. But we've been respecting these bullish PD arrays. I remember last week I thought that this Monday the 9th was going to be the high of the week. Ended up blowing past that, violating these daily bearish PD arrays. So on the daily chart, I still honestly don't know what we're going to do. ICT noted last week the mean threshold of this wick as a potential target. And then I'm also looking at these daily equal highs, but on the daily chart, honestly, I don't really know. The only clear thing for the drawn liquidity for me is this market maker buy model here. And the reason why I think that this is going to trade up higher instead of coming up here and reversing is because, again, on the daily chart, we've been respecting bullish PD arrays. We have this previous week low SMT daily, or previous day low SMT intermediate term high break in market structure. So all of that confluence together, plus these equal highs, makes me think that these equal highs here are the near-term drawn liquidity, at least for Monday and maybe Tuesday's trading. After that, I really don't know. We'll probably have to wait for what price gives us to see if we form maybe a bearish setup here after taking these highs, but that's too far ahead to know. So at least coming into the week, I'm going to look for a long setup to take these equal highs out here and complete the market maker buy model. So yeah, that's it for US 500. And then just to note for Bitcoin, we blew past this high here. So I got taken out on this short. And this looks pretty scary in terms of this rally up. But I'm still leaning bearish. What I noticed on the chart is that this setup probably failed because we haven't taken any significant buy side liquidity in a long time, and probably like everyone and their mom is short Bitcoin, right? And we've really just been kind of going down. Really, the last time we took some buy side was here, and then here was a kind of short-term buy side. But pretty much all of this moved down since middle of last year was just retracing into a imbalance, retracing into an imbalance, retracing into an imbalance, retracing into an imbalance, retracing into an imbalance, and now it looks like they are creating a Judas swing here to take buy side, whether it's, or we did take September high. I'm looking at August high to see if they take that. But what I'm just waiting for now is to see which PD arrays are respected. We have this bearish order block here, weekly order block, August high, and weekly fair value gap here. If we're going to be bearish, I don't think that we should close above this weekly fair value gap. So what I'm anticipating price to do is form some type of setup here like that, whether we take August high or come into the order block or come into the weekly fair value gap. So right now I'm just really just going to be waiting to see what PD arrays are respected and if we form a setup at one of these PD arrays here. So yeah, that's what I'm thinking for Bitcoin. We'll see what ends up happening.